Hello, without wasting a lot of time, where is the best place to have your stop loss once you make an entry? So, this assuming this is the order flow, okay, breaking or the continuous break of structure to the upside, like that. Sorry, continuous break of structure to the upside, okay. So, assuming there is the higher time frame POI, so you'd really want to expect something like that trading below this swing low, that is a market structure shift, going back to fill or to balance the inefficiencies at this point, then trade below, okay, or go down. Now, if this is what you see in the chart, okay, so that would really be our market structure shift right there. Now, and having this leg, you make an entry where you see a fair value gap or an inefficiency. So you would want to call low at the consequent encroachment of it and place your stop loss just above this high. The high that was recently printed and target the previous lows that you see on your left here, okay? Now, without wasting a lot of time, let's go right into the charts, all right? So what I see here, I want us to frame an entry here, okay? Frame an entry or see how this or see how entries would have been made at this point and see where we would make or we'd put our stop loss. All right. So first of all, you can see that this previous low was very nice sell side liquidity. So that is the sell side liquidity. So that is the SSL. So coming back to this place, we see that sell side liquidity was swept and there's no candle that closed below it. Once it was swept, the price went back traded inside. So ideally, I would expect this wave that swept the liquidity to be traded above and displaced. So if I were to expect a valid market structure shift here with this wave, I would want to see a closure above this high, which we failed to achieve. So for me, this is not a valid market structure shift. It is just a liquidity grab like any other. Okay, this one. A valid market structure shift should close above this high, this one. So like in this case, we see that this high was just wicked and the candles closed below it. So the candles closed back inside. So at this point, I still don't have a valid market structure shift yet. It's just if I was expecting a reversal, of which I am. Now, this wave, we can see that it failed to trade below this previous low. So there was a failure swing. This is another indication that the price or the sellers are weakening. Now, if this failed to break below this low, trading higher, I would want to see this high being broken, or rather being traded above, or rather being displaced. So I'd want to see candles closing above this high, and that would validate my expectations that that is a valid market structure shift. So this traded above, but still didn't break this high. It traded back below. So my recent high becomes this one. So if I am to go high, or if I am to if I have to validate my setup, or to confirm my entries or to confirm my reversal, I'd want to see the price closing above this high for me to believe or to have a confirmation that that is a valid market structure shift. So I'd want to see that high being traded above, of which it did. So you can see at this point, all right. So at this point we traded above this most recent high, minding the fact that we are from the higher time frame sell side liquidity. So a market structure shift can be significant in trading the reversal at this point. So when the price traded above this high, the most recent high, and we see that we have uh, a couple of candlesticks closing above, that is a valid market structure shift for me, right? Even though some people would still call this a valid market structure shift, right? It is, but for me, I would really want to choose this. Okay, I would really want to choose this uh, to really have in mind that that is a valid market structure shift. So for me, I've achieved that. Now, what else do I want to see? The wave or the leg that traded above this high causing market structure shift for me should have a fair value gap, an inefficiency or an imbalance. All right, all those things. So, so below this low and this high, putting my Fibonacci retracement like this, I'd want to expect or I'd want to see the price trading to the discount, trading into a fair value gap before going higher. So I'd want to see where is the fair value gap at the discount. So for me, I would see that there is a fair value gap at the discount right there. Hope you are seeing that. That is the fair value gap at the discount. I wouldn't want to consider anything above the discount. That is the premium. I don't want to buy at the premium. I want to buy at the discount. So at the discount, that is the fair value gap that I see. And this fair value gap here, let me remove this. This fair value gap here has been traded into, right? This fair value gap has been traded into. So that would have low probability to hold the price, because at the end of the day, again, we can see that it is in part of it is in premium and part of it is in discount. So you don't want to consider that. So the fair value gap at the discount is this one. We have another one. This is another fair value gap right there, this one. So you really want to monitor the price at this zone, and your entry would be at the top of the fair value gap, right there, or even the consequent encroachment, the equilibrium of it. I love just placing my entries at the equilibrium of the fair value gap, right? So, and we would just place our stop loss at this low, all right? Because you don't want to place a stop loss just a pip below your entry, because who knows, maybe the price would trade into this extreme point of interest, the extreme fair value gap at the discount. So you wouldn't want to risk that or getting stopped out. So you would want to place your stop loss below or at this swing low, this one. So you would probably be risking 8 pips, yeah, 8 pips. And where is your target? Your target would be the recent high, all right? So the recent high for me would be this one. will be that one. So that is my buy side liquidity. That is my buy side liquidity. So that is my first target. Okay, so you would be risking 8 pips, targeting 35 pips. That is a very good trade. It's a very good trade. So, but the point was, the best place to have your stop loss is just below the swing low. Alright, just below the swing low. Alright, so you wouldn't want to place your stop loss here. You'd be really be risking a lot. That's 17 pips. Alright, you want to just place your stop loss right there and target the previous high. So with that said and done, thank you for watching, and until we meet again, peace.